Hello. So today I'll be discussing what is annuity method. This is an accounting procedure to calculate goodwill. In the previous video I have discussed many techniques to calculate goodwill following average profit method, super profit method and capitalization method. So today I'll be discussing about annuity method. But if you want to understand the annuity method, I suggest you to understand what is super profit method or average profit method. For that, I've already made a video. If you haven't watched the video, you watch the video on super profit method. That will clear your concept. So moving on to the next slide. This is the slide which I had used to explain the concept of super profit method. So in order to calculate super profit, we need to first calculate average profit and deduct by normal profits. So average profits can be calculated looking into the profit and loss account data, and normal profits can be calculated by looking into the normal rate of interest and then multiplying it with the total capital invested. So average profit minus normal profit will get super profit. In the earlier case, out here the normal average profit minus normal profit is 26. 26 is the super profit. So earlier the super profit 26 used to be multiplied by the numbers of years of purchase, which in this case is 3. But since we are following annuity method, this 26 will not be multiplied by 3 but will be multiplied by PVIFA, which is the present value for annuity. In other words, this 26 is the future value. Now this 26 has to be, for this 26 present value has to be calculated. This present value will be calculated following the annuity method. So let us focus on what is annuity method. This PVIFA formula is 1 plus I to the power n minus 1 whole divided by I into 1 plus I to the power n. As we all know that 1 plus I to the power n is a formula to calculate compound interest, and PVIF is just the extension of this compound interest. So we need to understand I is normal rate of interest, which is normally given in the question. N is the number of years for which the data has been given. In our case, in the previous slide, the question, when we look into the question, I was 10% and N was 3 years. So we can calculate the value of PVIFA. We already know the super profit. In this case, 1 plus I means 10%, that is 10 by 100 is 0.10 to the power n is 3 minus 1 whole divided by I is 10%, that is 0.10 into 1 plus 0.10 to the power 3, that is n. We will get the value of 2.486. This is the simple calculations, but you need to understand one thing. You'll have to follow the Bodmas rule, or else you will not get 2.486, which is a very basic mathematics. And we already know that looking into the previous slide, super profit was 26. Now we'll not multiply by numbers of years of purchase, which is 3, but we'll multiply it by PVIFA value, which is 2.486. So it is 64.658. This is how we calculate goodwill following annuity method. I hope the concept is clear, and if you are not able to understand it, you just write it in the comment box. I'll just make more simple video, and in the coming video I'll try to solve more good problems, so you will be able to understand it easily. Anyway, till the time, take care. And